Hello and welcome to today's webinar with Dean Dorton. The topic is provider relief funds reporting requirements with Lance Mann, one of our assurance directors. Thank you so much. We hope you learn a lot. And with that being said, I would love to introduce Lance Mann.
Good morning, everybody. We are grateful that you've joined us today for the provider relief fund reporting and compliance requirements. This is only an hour long, so we certainly can't cover all 60 pages of the FAQs, but we'll do the best we can. Please submit questions throughout. Julia is going to be monitoring the questions, and we'll answer as many as we can. And those we can't answer, we will send email responses back to you, or you can always reach out to me. My contact information is at the end, or Adam Shoemaker if you work with Adam as the leader of our healthcare team. My name is Lance Mann. I'm an assurance and consulting director with Dean Dorton. I spend quite a bit of my time working with healthcare organizations, hospitals, and physician groups, and FQHCs. I have been spending the last several months of my life with the provider relief funds and trying to help hospitals navigate all of the complexities that is there. The objectives today are really to understand the reporting requirements and kind of understand how you're going to get to the information you need to report with the incremental expense and lost revenue calculations, and then a high-level overview to help you get ready for your single audit or compliance audit when you get to that point. As with any CPE-related item, we've got to have an agenda. We are going to focus mostly on an overview and helping you get ready for those reporting requirements. All right, provider relief funds overview. So for anybody that's been monitoring it, it's been a year of changes with the provider relief funds as it has with the rest of the world. So in March of 2020, the CARES Act was signed into law, and everybody kind of operated based on what was in the CARES Act, and it was to help prepare for, respond to, and prevent the spread of the coronavirus, along with maintaining healthcare capacity. In essence, what the legislature wanted to do was to make sure hospitals didn't lay off a lot of people that needed to be helped with COVID, because if you remember back in April and May, most elective surgeries had to be canceled. In June, we got our first bit of information about compliance with using these funds, and they provided the definition of lost revenue. It focused on, in essence, any reasonable method of calculating lost revenue. And then in September of 2020, we received some additional guidance that introduced a two-step process. The first step being identifying costs related to responding to, preparing for, and preventing the spread of the coronavirus, and step two, lost revenue. In October, HHS released some post-payment notice of reporting requirements that changed the definition of lost revenue to a negative year-over-year change in net operating income, and that was not well received in the marketplace. And after a few other changes, in December, legislature passed another stimulus bill, and within that, there were 2 pages related to the provider relief funds. One, they added $3 billion to the provider relief funds, and they also reverted the definition of lost revenue back to the June definition, which is what most providers wanted. And there were also some nuances related to targeted distributions that we'll dig into later. And then in January, we received some additional information from HHS about how they were interpreting the December legislation and more well-defined lost revenue and incremental expenses and how those should be reported. CARES Act, kind of had 4 big buckets that were healthcare related. The biggest one was the provider relief funds, $175 billion. There was $45 billion that was allocated to FEMA. That you can apply for. Most hospitals can apply for to get FEMA money. One thing to note is the provider relief fund money is the reimbursement source of last resort. So if you got FEMA money and provider relief fund money, you have to use all of the FEMA money first before you can dip into the provider relief funds. There were some changes in Medicare reimbursement. There was a 20% bump. temporary suspension of sequestration, dish payment cuts delayed, and advance payments for Medicare if you applied for those. And the FCC received a small amount for government and nonprofit hospitals. In 2021, in December 2020, we got the stimulus bill that we just talked about that changed the definition of lost revenue. And it also allowed for multi-hospital systems to transfer general and targeted provider relief fund grants within the health system. We'll go into that in more depth later. The provider relief funds were split into different categories of provider relief funds. There was a general distribution, high impact. There were some rural targeted distributions, some skilled nursing facility distributions for infection control, tribal, Medicaid, safety net, and dental distributions. All of these different distributions are required to follow the rules that are within the FAQs of the provider relief funds. I put this together to kind of show the timeline of thoughts as you may have gone through. If you're audited currently, as you went through your audit last year, and if you're not audited, some of the thought patterns that will go through this year if you're going to require one. But for June 30, 2020 year ends, depending on when you issued your financials, we had to think about subsequent event considerations because of the HHS guidance that was coming out in September and October and determining, should any of the revenue that you've recognized up to that point need to be reversed. At that point, we didn't know if you were going to be required to have a single audit. We knew shortly after June 30, but I don't believe as of June 30 we knew. In September, we kind of had more information, not really much of a subsequent event consideration anymore, and we're trying to determine, have you met the measurement criteria to recognize revenue? And many had not recognized it as that point. By December 31, we kind of had our arms around it. We knew our calendar year-over-year change in revenue, and so you should be able to estimate how much revenue you should be able to recognize as of December 31st. And then fiscal years after December 31st is when you're going to have to start requiring a single audit. So we're going to go into the single audit reporting requirements in a minute, but for those who are a fiscal year end, you won't have to include it in a single audit until your 2021 year end. And I've got a slide that describes that in more depth later. We just included a few links for you all in the presentation. Julia will send out the slides later, and you can go to some of this guidance around accounting for the provider relief funds in your OMB compliance supplement for the single audit. So how are we allowed to use provider relief funds? There's only two ways you could use the money. If you can't use it for those two reasons, you have to send it back to HHS. So the first way is to spend it on expenses incurred to respond to prepare for, and to prevent the spread of COVID-19. And those can only be incremental expenses to what you would typically spend. And so you take your incremental expenses attributable to COVID-19, you subtract any incremental reimbursement you may have received for those expenses, and then you add to it your lost revenue, and that's your total amount that you can use. Hopefully, it's all of the funds you received that you're not sending back. I added in the specific text from the stimulus bill in December. It just points out there at the bottom where the provider may calculate lost revenues using the FAQs released in June of 2020. In addition, the stimulus bill included information that you could transfer targeted distributions within your health system. And there's some potential compliance things you need to know about that we'll dig into in a moment. So I'd like to spend a little bit of time on the January 15th post-payment notice of reporting requirements, because it's, right now sort of the driver behind how we're helping our clients get ready for these reporting requirements. And so included in the release were 6 big categories. The first was some of the options for calculating lost revenue. The second was how you're going to be expected to report your incremental expenses. The next is reporting data elements and hospital operating metrics to be reported, how other assistance should be reported, and other assistance are things like FEMA money that you received, Paycheck Protection Program loans that you may have received, and there's a list of many other things within the guidance that we can get to you if you need it. And then also details on how targeted distribution transfers should be reported and who's responsible for those reporting requirements if you transfer distributions within your health system. So I'm going to start with lost revenue because most people have been focusing on that component of it. And so with the release, and then these next few slides are quite wordy because words matter right now with some of these things, and I didn't want to remove any words and try to summarize it using my own words. And so these are copied and pasted right out of the reporting notice that they came. And so you've got three options for reporting lost revenue. The first is the difference between calendar year 2019 and calendar year 2020 actual patient care revenue. This is net patient service revenue, net of all of your contractual allowances and bad debts compared for both years. The second is the difference between your 2020 net patient service revenue compared to your 2020 budgeted net patient service revenue. And if there's a difference between those two, if there's a negative difference between those two, you can report that as lost revenue. There's a note, your budget needed to be established and approved prior to March 27th, 2020, and you are required to submit additional documentation at the time of reporting. And your CEO or CFO will have to certify that the budget was approved prior to that date. The third one is really the one that most people have been focusing on, and it is calculated by any reasonable method of estimating lost revenue. This option comes with some higher risk. I've kind of bolded a sentence there in the middle that if you do plan to use an alternate methodology, you may face an increased likelihood of an audit by HRSA. If you do plan to go down this approach, you're going to have to, draft a memo describing the approach that you're taking to calculating lost revenue. Why you believe the methodology is reasonable, and provide the calculation to HRSA when you do the reporting. HRSA will review your methodology and your calculation, and they will let you know if they believe that it's reasonable. And if they don't believe it's reasonable, you have 30 days to resubmit your report using either the calendar year actual option or the budget to actual option. And so if you do plan to use this any reasonable method, just know you only get one shot at it as it stands today. And so if you try the approach, you're not going to get another option of using a different reasonable method. You've got to go to one of the other two options. So in addition to lost revenues, incremental expense reporting is actually your first source of reimbursement for provider relief funds. It's step one in the approach. And there's two categories of incremental expense reporting. The first is for everybody who received PRF funds between $10,000 and $500,000. You only have to report healthcare related expenses in two buckets: general and administrative expenses and other healthcare related expenses. If you received more than $500,000 in PRF funds, you've got to break it down into at a more granular level. And I've listed those here. So within general and administrative expenses, you've got to list incremental expenses into these 7 buckets listed there. And the same for healthcare related expenses attributable to the coronavirus. You've got to list it out in these 5 buckets there. And so you'll need to make sure that your records are such that you can pull the information out into these categories. And again, this is copied and pasted verbatim right out of the guidance. So in terms of accounting guidance, I know this is more compliance around it, but we'd do a disservice if we didn't tell you how to account for these funds. The provider relief fund should be accounted for as deferred revenue or refundable advances until you meet the criteria to keep the money. And so until you have spent the money on either incremental expenses or lost revenue. There has been some question about, since there's a calendar year to calendar year reporting requirement as it relates to comparing actual 2020 to actual 19 and actual 2020 to your actual budget. Should you have recognized any of it prior to December 31st, 2020? I think we're past that for you all, for any non-calendar year companies here. But it was a question earlier in the year that never got answered in a real meaningful way. I think there was just a mixed bag of who recognized revenue early and who didn't. So reporting. So for all of the funds that you used by December 31st, 2020, you will have to report on those funds, how you use them. The date for that has not been set yet. It was supposed to be February 15th. The window was supposed to be January 15th to February 15th. And HHS has come out and said that is no longer the reporting window. And we don't have a new reporting window to give you yet. So it's yet to be determined. Please monitor our thought leadership that we put out, and we'll notify you when that is released. There's a link on this slide that takes you to the reporting and auditing webpage of the provider relief funds within HHS. And then there's going to be another reporting requirement. So any unspent funds you have as of December 31st, you have until June 30, 2021 to use them. And on between July 1 and July 31st, you'll have to report on how you use those remaining funds. Any funds you're unable to use by June 30th, you'll be required to return back to HHS. And I know that's very complicated, so obviously let us know if you have any questions. What can you do now as it relates to getting ready for your reporting requirements? You can register with the reporting portal. HHS and HRSA are recommending you go ahead and get registered so you understand how to use the system. We have included a link here to where you can go and register for the portal. Okay, so one of the reasons I wanted to do this webinar is I think there's some confusion around incremental expense calculations. In addition to all the questions we've gotten about lost revenue, I think there's more options for incremental expense calculations than some people think. And so I wanted to dig in on some of those. So the next few slides are a little wordy because I've copied and pasted a few of the FAQs directly out of the FAQs because again, words matter. And so within the frequently asked questions for the provider relief funds, HHS has provided some examples on how you can calculate your incremental expenses. And so you'll notice this first one here, they should calculate incremental G&A expenses that were incurred that were attributable to COVID-19 and estimate the portion of those expenses that were not covered through operational revenues. And they provided some examples. And the same for expenses attributable to the coronavirus, not reimbursed by other sources. These things apply to each type of healthcare expense attributable to the coronavirus. The next one is, how do I calculate expenses attributable, not reimbursed by other sources? This is a very long FAQ, and so this is the first part of it. The part I want to focus on is on the next slide. So they've shown a specific example of how to calculate incremental expenses that I think many providers have ignored, and I wanted to highlight a little bit. And so the example given in the FAQs is, a $5 increase in the expense or cost to provide an office visit is calculated in this way. So what were your average expenses or costs to provide an office visit pre-pandemic and post-pandemic? And as you can see here, there's a $5 difference. And so that's the first step, is calculating what were your incremental expenses. The next step is what were your incremental revenues associated with those additional expenses. And as you go through the examples, you'll notice for everyone except for example 4, there's a $5 incremental expense. In step 4, there was a $5 insurer supplemental coronavirus related reimbursement of $5. And so that would be an incremental revenue. But all the rest, you get to report $5, and it's very much a high level analytical approach to this. And you'd have to take those $5 and allocate it amongst the various expense buckets that we previously talked about. So let me take you through an example that I created here. Well, first, let me go through what are the multiple options for calculating incremental expenses. And so I think the option most people are taking is they're accumulating COVID-19 specific purchases and expenses. They've got an expense code in their GL and they're recording everything to it, and that's what they plan to use for their incremental expense calculation. And that is a fine way of doing it. Examples of that would be personnel assigned to new COVID-19 specific tasks, temperature checks, door screeners, COVID-19 tests for every patient that has to come in, lots of different things. Personal protective equipment, hand sanitizer, all the extra things you bought this year, COVID-19 capital purchases, additional COVID-19 supplies, and a lot more. Everybody's going to have different. There was food supplies that had to be purchased and packaged in a different way. There were corridors that had to be renovated. Ventilations that had to occur, and just a lot of different things that you could have tracked. So that's one way to do it. The second way to do it is to calculate incremental expenses on a line item by line item basis. You could go through each of your expense categories within your GL and determine where are incremental expenses that are COVID related. And the final version in my mind is to calculate your incremental expense per patient visit and extrapolate that across all patient visits for 2020, which is the approach I'm going to show you now. And I think hospitals and physician groups should look at all of the options, because you may find that your incremental expenses are higher in one rather than the other. And so the example I've got here, and we've done it on a couple hospitals and physician groups, and it's shown higher incremental expenses than you would have expected. And so your operating expenses for 2019, $14 million. Your number of admissions were 4,500 admissions, so your average cost per admission for 2019 was $3,111. Your operating expenses for 2020 were $15 million. Number of admissions were only 4,300, and so your cost per admission in 2020 is $3,488. You'll notice an increase in cost per admission of $377. Multiply that by your number of admissions in 2020, and you get total incremental expense of $1.6 million. You may be saying, well, that's more than our total operating expense increase. You're right, because if you were operating your business as an efficient hospital, you likely would have had cost reductions because you had, admission and patient volume reductions, but you actually had to spend more to see fewer patients. And so in this example, we're saying you get credit for $1.6 million of incremental expenses. However, we need to look at incremental revenue that you've received for those expenses. And so in 2019, over to the right, you had $18 million of net patient service revenue. You had the same 4,500 admissions. Your revenue per admission was $4,000. In 2020, you receive $17.5 million. Total number of admissions are 4,300. Your revenue per admission is $4,070. So you're receiving more per patient visit in 2020 of $70. $70 times your total admissions of 4,300 equals $300,000 of incremental revenue. We're going to deduct that $300,000 of incremental revenue from the 1.6 of incremental expense, and your net unreimbursed incremental expenses are $1.3 million. And then you would take this $1.3 million and allocate it amongst the applicable expense categories that we covered earlier. You'll also notice here, there's also likely a case for lost revenue because your net patient service revenue went down $500,000. And so that would be an additional amount that you would add to this. There are some adjustments that you'll be required to make. There's a salary limitation on what expenses can be included in your incremental expense calculation. And so HHS did not want any expenses to be paid to employees that earn over $197,300. They're not saying you can't pay people more than that. They're just saying they didn't want grant funds to be used to pay people over $197,300. And so what we've done in our calculations is looked at employees receiving over $197,300 in both 2020 and 2019, determined if they had incremental compensation paid to them during the year, and we removed that incremental amount. Or if you had an employee that made over $197,300 in the current year, but not in the prior year, you would limit the cost you're including in your provider relief fund costs to that $197,300. Property and expense calculations. So originally, in the original FAQs, you could only take into account depreciation on COVID-19 specific capital purchases, but they've, within the last few months, clarified that if you bought COVID-19 specific capital purchases, and I've got a list of those on the next page, you can include the full cost of those in your incremental expenses, not just the depreciation. You do want to be cautious that you don't include any operating expenses for facilities that are not critical to providing patient care. And so if you've got storage facilities or other spaces that you may lease, you just need to be conscientious of what operating expenses you're including in here. Do not include any revenue or expenses from durable medical equipment was a specific FAQ. And cost reimbursed hospitals will be limited in their incremental expenses. And so there was an FAQ that clarified that. In essence, if you think of critical access hospitals, you're reimbursed at cost already. And so you would have incremental revenues associated with all of your incremental expenses if you're cost reimbursement. And if anybody has any questions on that, we can dig into it on a case-by-case example, because each cost reimbursed hospital is going to have a different set of criteria to look at. I mentioned COVID-19 specific capital items. These items are pulled directly out of the FAQs as items that would qualify to count all of it in your incremental expense calculation. And it's the stuff that you would expect: disinfectant supplies, ventilators, masks, suits, PPE, reconfiguring facilities to create a COVID ward, things like that. We've had a few questions come in about taxes. Can we pay taxes associated with provider relief funds? Yes, provider relief funds are taxable to for-profit tax-paying organizations, but you can also use the funds to pay your taxes, except with the nursing home infection control distribution payments. Okay. So for the next 10 minutes or so, we're going to dig in on single audit, major program guidance provider relief fund compliance audit, however you want to call it. It used to be called an A133 audit. for those familiar with those. There's going to be a lot of organizations that are subject to a single audit for the first time, and we'll work through it all together. So from a grant perspective, the provider relief funds are considered a government grant. And so you're required to have some audit procedures performed around it. And so when the government provides a grant, they assign it a CFDA number, and we're going to go through that definition in a moment. The provider relief funds were assigned CFDA number 93.498. And so let's do some level setting here. CFDA is the Catalog of Federal Domestic Aid. CFA is your Schedule of Expenditures of Federal Awards. OMB is the Office of Management and Budget. They're the ones who create the rules for single audits. Uniform guidance is the guidance that auditors follow to do your audit. GAS is Government Auditing Standards. GAGAS is Generally Accepted Government Auditing Standards. GAO is the Government Accountability Office. And so non-federal entity could be a nonprofit or a commercial entity. We'll talk about a little bit of program audits and gas audits and single audits as we move through this. So here's a few common questions. I'm a for-profit healthcare company. What should I do? And so we're going to go through that in a moment. But if you're a for-profit healthcare company that received in excess of $750,000, you will be subject to some form of audit as it relates to the provider relief funds. I hope this is not the first time you are hearing that, but there will be some audit you will have to do. What is a program-specific audit and how do I qualify? We're going to go through a table that will help you determine if you're eligible for program-specific audit in a moment. What does it mean to have an audit conducted in accordance with government auditing standards? The government, just like non-government audits occur, have their own set of auditing standards, which tell me how many samples I got to pick and do I need to be independent of you and what are appropriate audit steps to take. There's rules for the for-profit world and there's rules in the government space. The government space is a little more strict. And what is a single audit? A single audit is an audit that we perform to make sure that organizations spend their grant money how they were told they could spend their grant money. Typically, there's a list of, when you get your grant document, there's a list of 10 or 15 or 20 items you're allowed to spend your money on. So long as you spend it on those things and you spend it within the right amount of time, you're fine. This one's a little more complicated because how you can spend your money is a little more vague within the FAQs. So government auditing standards are issued by the GAO. They apply to all audits performed to satisfy a federal audit requirement. It builds on generally accepted auditing standards. Certain for-profit entities may be able to satisfy the HHS audit requirement with a financial audit of the federal award, which is a program-specific audit where the uniform guidance wouldn't apply, but government auditing standards would apply. And we're still going to be, the audit steps are likely going to be the same. They just may cost a little less for some of the compliance requirements we'll have to follow. There's still more guidance waiting to come out on how the program audits will work for this. If you're a nonprofit, typically doing a single audit or typically doing a financial statement audit, the difference between a single audit and a program audit are likely not very much. So most of those organizations will likely proceed with a general single audit. So what are my options? I'm a non-federal, non-commercial entity. So I'm a nonprofit organization. Yes. And then the next bucket is, did you expend federal awards under more than one federal program? Yes or no? If no, if you only got provider relief funds, that's your only federal program, then you may be able to do a program audit. I will tell you, if you're already doing a financial statement audit, the difference between a program audit and a single audit is very little. but you may have that option, and it's based on what we currently know. I'm a commercial for-profit entity. You have a few more options. So did you expend federal awards under more than one federal program? And this is going to be key because most for-profit organizations don't track their government grant funds. And so did you get any FEMA money? Did you get any other CARES Act or grant money during the year that's federal? If yes, you need to go to the bucket on the left where you choose between a single audit and a gas financial audit of each individual award. If no, if provider relief funds are your only one that you've got, then you can decide between a program audit and a gas audit. Not going to be a lot of difference between the two, likely. As you consider your government grants, one thing to know is the Paycheck Protection Loan money is not subject to single audit or includable on your schedule of expenditures of federal awards. So just know that. I have been using the term schedule of expenditures of federal awards. Let me walk you through what that means. And so typically we would be able in a single audit, you would hand us a list of expenses. We spent $1 million of XYZ grant and here's how we spent it. And there would be a list of them. That's not necessarily the case here because you've got lost revenue that you are applying it towards. And so whatever information you put on that reporting requirement, I discussed earlier today, the HRSA reporting requirement for how you use the funds through December 31st, whatever you input into those boxes is what is going to show up on your schedule of expenditures of federal awards for your single audit or your program audit. So it's crucial that you spend a lot of time making sure you get the right numbers in the reporting requirement. The same will go for your next, for funds expended between January 1 and June 30. Those will show up on your next schedule of expenditures of federal awards. So other potential oversight that you need to be aware of, the Office of Inspector General is welcome to come and audit these funds from you. HRSA has said that they're going to be doing some audits in this, and other federal agency desk reviews and other watchdogs that may be coming to look. And so just make sure you're dotting all your I's and crossing all your T's. So I did want to talk about fiscal year-end entities because this was a big deal. It's probably about a month old, big deal. So most of you should already know if this applies to you. But if your fiscal year-end is on or before December 30th, 2020, you will include nothing on a schedule of expenditures of federal awards for your 2020 year-end. So if you're June 30, 2020 year-end, you do not include anything for 2020. If you're a September 30, 2020 year-end, you include nothing for 2020. If you're a December 31, 2020 year-end, excuse me, you will include your December 31st, what you report to HRSA on your December 31st schedule of expenditures of federal awards. If you have a fiscal year-end between January 1, 2021 and June 29, 2021, you will base what you report off of your December 31st, 2020 reporting requirement to HRSA. If you have a June 30, 2021 or after fiscal year end, you will likely report your December 31st and June 30 numbers, both numbers in your schedule of expenditures of federal awards, but that guidance isn't out yet. The guidance that's out only goes through June 29th, 2021. And so more guidance will come out next year around what you will be reporting. But my guess is those June 30 and after fiscal year ends will include both what you included as of your December 31st reporting requirement and as of what you included in your June 30 reporting requirement. So whenever a single audit is required to occur, the OMB, Office of Management Budget, put out compliance requirements. And these are the things that your auditor is required to test. And for provider relief funds, there's only 3 buckets that have been marked with a Y. You've got activities allowed or unallowed, allowable cost and cost principles, and reporting. The reporting part should be pretty easy. Did you comply with your December 31st reporting requirement? Did you comply with your June 30, 2021 reporting requirement? Those should be pretty straightforward. The activities allowed or unallowable and allowable cost and cost principles, meaning did you spend the money on what you're allowed to spend it on based on what you reported in those reporting requirements? The FAQs are going to drive a lot of how this is audited. So just know that. So here are the activities allowed and allowable costs. You've got to spend the money to prevent, prepare for, and respond to the coronavirus. And it can only be payments shall reimburse recipient only for healthcare related expenses or lost revenues. They may not be used to reimburse expenses or losses that have been reimbursed from another source. So that's the key. So FEMA dollars go first. If you got a PPP loan, you've got to use those before you can use any of the provider relief fund. And there's other other reimbursement sources that you've got to consider. There are some separate criteria for the skilled nursing facility infection control distribution and how you're allowed to spend it. And we can go over those with anybody who did get those monies, but there's 5 or 10 specific FAQs for the infection control dollars. So what should you be doing now? If you've not dug into the terms and conditions of the provider relief funds along with the FAQs, I would encourage you to read those. The FAQ document is a 60-page document. There's probably about 25 pages that affect most healthcare providers. And so I would make sure you're reading those and understanding them. Understand the reporting requirement document that came out. There's a link within our slides about that. Ensure your transaction cycle controls are well documented. Make sure you've got a memo or evidence to say, here was our thought pattern as it relates to how we identified incremental expenses, and here's our methodology for calculating lost revenue. Make sure you're tracking your expenses and your lost revenues. If you need help, consider an audit readiness provider, which will be a consulting firm that comes in to say, here's what the FAQs are, here's your facts and circumstances, and get them to help you prepare for the reporting requirements. And start, if you don't have an audit firm already, make sure you've contacted an audit firm that can help make sure that you're meeting all the right timelines and deadlines for getting it done. If you need help finding an audit firm, and Dean Dorton may be your AFO person, reach out to us. We can help if we're not able to do it for you. Good news, most of the time your single audits would be 9 months after your year end. You do have a 3-month extension for that. And so for December 31st year end, you have until December 31st, 2021 to finish your single audit. So you've got some time, but make sure you're taking some time to prepare.
So we've only received one question, but we still have 11 minutes, so we welcome as many questions as we can get in. And I apologize if you've answered this already, but what if a provider received a large settlement or mass adjustment during the 2020 revenue period, and without that settlement, they can easily show the lost revenue due to COVID? Do you think that settlement can be excluded?
Maybe. So if the settlement related to years prior to 2019, I think it's very cut and dry whether or not you included or excluded. There's an FAQ specific to Medicaid settlements for years prior to 2019, and that can be excluded from all revenue. And I know there was some large settlements that came out in March of 2020, at least for some of our clients, that we have removed from revenue when calculating lost revenues and incremental expenses. I also know that the Kentucky hospitals have been the benefit of the hospital rate improvement program, that they started receiving additional payments in March, April of this year for patient service days dating back to third and fourth quarters of 2019. I think there's a case to be made to remove those from revenue because most folks had not included those revenues in their budget. But I think hospitals need to know that there's risk there, and they need to make sure that they're well documenting why they're removing those funds from their actual revenues when calculating these lost revenues and incremental expenses. And I know that there's a large settlement that's planned and is almost ready for Kentucky hospitals to be paid out that's significantly larger than the one that started to come out in March. That will relate to, I believe, second and third and fourth quarters of 2020. And I believe those, there's a question, and I've talked to two other large public accounting firms about this, is do you need to include those in your actual patient service revenue for 2020? And I don't have an answer. I think there's a case to not include it, and I think there's a strong case to include it. And so each individual provider is going to have to take a stand on whether or not they include it and try with the alternative methodology of calculating lost revenues.
We got another question. Do PPP funds received and forgiven impact IEC calculation?
They do. Well, they do not impact incremental expense calculations, no, but they do impact lost revenue calculations. Thank you, everybody, for joining us today. We are grateful to work with many of you, and obviously we thank you for taking the time to visit with us today.